Well, good morning and welcome to Business Morning. Today we're checking the pulse of the markets, breaking down the inflation outlook and what it means for consumers and investors. We'll also spotlight Nigeria's maritime sector, exploring the push for local ship ownership, smarter trade terms, and how the cabotage framework could unlock jobs, revenue and growth. Plus, top business headlines and expert insights to start your day right here. We're going to be getting into the market straight now. And we're seeing oil prices that are volatile today, up and down. Traders are gauging the potential for supply disruptions after U.S. guidance for vessels of Hamas that kept attention squarely on tensions between Washington and Tehran. Earlier, when we took these numbers, see oil was up by 0.119%. That's for Brent, 69.17 dollars a barrel. WTI crude, that was also up marginally, about 9 basis points at $64.42 a barrel. But trading right now, we're seeing a lot of volatility. It's actually in the red right now if you're checking for live trade. So that's the picture right there. We'll bring you up to speed on what's playing out in the oil market right there. All right, let's see how your money performed yesterday. We see buying interest in heavyweights like Dangote Cement, Ardell, Nigerian Breweries, and Lafarge Africa lifted Nigerian exchange to start the week, really strong. And we see the oil share index, a big 1.30% advance, 173,000 points, reaching new levels at this point, pushing market capitalization to 111 trillion Naira, with gainers more than doubling losers as investors, investor sentiment is staying, firmly bullish right there. Let's look at the trading sentiment there. Activity was all in the green with volume, value, and deals much more than we had in the previous trading day. That was last week, Friday, showing investor appetite was quite strong there. Now we see the likes of CAP, May & Baker, Dacom, they topped the charts. So trading volume and value, we see that was quite strong there. May & Baker, full 10% rise. CAP, full 10%. Same thing with Dacom there, 2 Naira, 9 kobo there, big 10% rise. Let's look at the laggards from yesterday. Unicel, that was down by 9.98%. Triple G, 6 Naira 65, 8.90% down. And we see Abe there, that's 13 Naira 75, down 8.03%. So, definitely, analysts said we should expect some, profit taking and, thin trading this week, but it's starting off really strong. Top trades, Axis Core, that also added to share price yesterday, almost 1% yesterday. Zenith Bank, 46.24 million traded. NSL Tech, 43.94 million. Those were the top trades from yesterday. So all the stories now. The Bureau of Public Procurement, they've issued a new directive for government contractors and bidders. From now on, any procurement involving the lease, rental, or hire of equipment requires a valid equipment leasing agreement, registration certificates, or ELARC, that's ELARC, issued by the Equipment Leasing Registration Authority. The move, aligned with Public Procurement Acts and the Equipment Leasing Act, is designed to ensure full compliance and strengthen the execution of government contracts across Nigeria. We'll definitely keep tracking that story and see how compliance goes. All right, to the central bank now. They've confirmed full deployment of its S4 scriptless settlement system as the exclusive gateway for primary market auctions of government securities. This marks a major shift to a fully centralized electronic process for treasury bill issuance and sets the stage for future expansion into secondary market, reshaping how investors and banks interact in Nigeria's debt options. Definitely love to see right there with those fixed income markets. Then when it comes to registering a business, we see the Corporate Affairs Commission, they've launched a new drive to boost entrepreneurship, offering free business name registration for 3,500 small businesses across all 36 states and the Federal Capital Territory as part of its 35th anniversary celebration. The initiative aims to lower the cost of formalizing enterprises, expand access to government services and financing, and encourage more Nigerians to take their businesses mainstream. So, yeah, try and be part of the 3,000 500 there. All right, the Nigerian Association of Chamber of Commerce, Industry and Mines, Agriculture, NASIMA, is calling for urgent collaboration between government and businesses and industry stakeholders to bring down energy costs across the country. The call was made earlier this week during a press briefing where NASIMA highlighted the impact of high energy expenses on business operations and competitiveness, urging coordinated action to reduce costs and boost industrial growth. Take a listen.
I think it's very sensitive, especially to issue that is crucial, like this power, because energy is an issue for everybody.
We are all concerned about the energy situation in Nigeria, there's no doubt. And energy costs is very significant for manufacturers particularly. So any alternative that could, bring the costs down, particularly the cost of energy, is welcome. And if this alternative has been verified, we will be excited by it, and we will encourage it. And if that is the case, we will encourage our members to adopt it. That's it. Anything that will enhance efficiency, energy-wise, will be acceptable and encouraged by us.
All right, so our first conversation now, it's inflation reporting season, and definitely we're expecting numbers for January right here in Nigeria. Joining me to get a forecast of what to expect, we have Dr. Ifeoma Nwaokolo, Head of Research, Financial Derivatives Company, also Assistant Vice President, Research at the same company. Great to have you on the show. Good morning.
Good morning, Laddie. It's a pleasure.
Fantastic. So, yeah, we're here again. We keep tracking the inflation numbers to see if consumers are getting a break at this point, and how investors are getting real returns at this point with inflation going lower. We did get the number for December. It was a flip, compared to what we reported previously for November. So what are we seeing for January? How crucial is the inflation number for January? Hello, Dr. Nwaokolo. I don't know if you can hear me.
Hello, I guess your network is fluctuating.
Okay, can you hear me now?
Yeah. We are projecting that this inflation is going to continue in January. Of course, it's a usual trend. Inflation in January always trend downwards, and this is because of a lot of factors, because of the people have already stockpiled during December. You bought almost everything you needed in December, and coupled with the fact that people spend heavily during festive period. So January period is usually a period where people constrain their demand. So you see demand pressure decline in January. That's always the trend. And this year's trend is also going to be buttressed by lower FS pressure, because FS pressure has been quite stable in January and up until now. And we are going to see that it's going to come down, coupled with so many factors. Demand pool has declined in January, and then people are focusing towards payment of school fees and all the rest. So I see demand decline. And once demand decline, you know that inflation also is going to taper downwards. So this was also supported by the PMI result that we saw in January. PMI, that is Purchasing Managers Index, showed that there was a huge decline of more than 4% in the PMI, from 53% in December to 49%. And PMI signals economic activity. So once PMI declines, it means that economic activity in January generally declined. So that's why we're going to see a shift, a continuous downward shift in inflation trend in January. And will this continue probably into February? Maybe yes. Then don't forget that February is when the Ramadan is going to start. So when the Ramadan kicks in, we may see a slight tick up, maybe in month-on-month inflation or so. But month-on-month inflation also, we are projecting that we are going to see a decline. So all the inflation sub-indexes are going to move in tandem with the headline inflation that's declining from our projection.
All right, so now that with the new methodology, we have successfully completed 2025, reporting all the inflation for the different months of 2025, and now we're in a brand new year, 2026. Is this the kind of inflation year that we actually feel what the numbers are saying?
Well, I would say that what we saw last year was basically driven by the base year effect. So we'll begin to see the true picture of what inflation is going to be in 2026. And let's not forget that Nigeria is a country that is import dependent, and from the global perspective, we are seeing projections that food inflation majorly, food prices majorly globally is going to decline. And since we are import dependent country, most of our imports are going to decline, especially when you talk about maize. We also saw that last month, that the price of maize, domestic maize, compared to imported maize, the imported maize is actually cheaper. So what does that tell you? That tells you that imported commodities in 2026, especially, we decline sharply. And if that happens, I think we are going to see downward trend of inflation, maybe food inflation, and also we are going to have some conference of activities that may shift the trend, downward trend, maybe in future. I could say maybe due to election spending, because 2026 is a pre-election year. So once there is excess money supply in circulation, of course, it's going to trigger inflation upwards. But aside that, I think we are still going to see inflation continue to decline in the short term. But in the long term, a lot of uncertainties are going to either drift it upward or further downwards.
All right, let's look at commodity prices. Currently, what are we seeing with price movements there for commodity prices?
Well, for commodity prices, we've seen that prices of commodities have remained somewhat flat, because from our market survey in Lagos metropolis, we observed that over 60% of commodity prices remain flat. About 9% or 10% increased, and the others were downwards. So if you look at commodity prices, we have seen that the price of rice has remained flat at 63,000 naira. The bag of beans declined. A bag of beans, 50 kg of beans declined to 50,000 naira. Then a basket of tomatoes also declined, was flat, yes, flat. Gari also was flat. So most commodities in the market have remained flat. Aside those commodities, we are also seeing that imported commodities majorly remain flat. And what does that tell you? It simply means that our Naira has been quite stable for some time. So a pass-through effect has actually remained flat or declined. So that's why we are seeing commodity price remain this way. And going forward, it may also continue in February. We may see that trend continue in February, because if you look at commodity prices, currently prices remain quite stable, and that will be what we'll see in February, even into March. But the Ramadan, because of Ramadan, there are some specific commodities that may shift upward, like tomatoes, pepper, fruits. Generally, prices of those specific commodities that are Ramadan driven, we see an upward shift in those prices.
Okay, so Dr. Foma, what you're saying at this point is, if I go to the market now to buy anything, the market seller can't tell me, oh, God, prices have gone up, or because it's flat, according to your data. So I should be able to get, all the stuff, that I need at this point. All right, let's get a check on the FX market now. According to your slide, you're still reporting weakness in the parallel market. But, when you look at the official window, we're seeing a bullish sentiment there for the Naira. Gained over 1% last week and still quite bullish, starting off the week. Why are we seeing this disparity?
The FX market?
Yeah, the FX market.
Ladi, can you hear me?
Yes, I can. Yeah, so the FX market, you're reporting the parallel market at 1,450 to the dollar. But the official window was still seeing the 1.3 region. Why are we seeing that disparity?
Well, the FX market has been quite stable for some time, and we have seen once the FX market remain flat, it means that the stability, the demand is equal the supply. But we are seeing disparity because, and this disparity will continue, and it's going to create room for arbitrage. And we are seeing this disparity because the demand pressure in the FX market, in the parallel market, is much more than what we see in the forex market. Because the forex market is a market where which provides basically for some specific needs, not all needs. So there are no much pressure in the parallel, in the FX market, or let me say in the NAFEMS market, that is the official market, and we have much pressure in the FX market. So what it simply means is that CBN should at least make more supply to bridge the gap. There's more supply in the parallel market. I think that gap will be bridged. But if it's left that way, I think over time we'll begin to see the problem of arbitrage. We'll begin to see that people will kind of source for FX in the official market and redeploy to the parallel market to make some gains. So that gap has to be bridged. But be it as it may, we have seen that the Naira is beginning to move towards its fair value comparing to the PPP. You see that the gap between the PPP, the official rate, and the parallel rate is not more than 2-3%. So once you see that happening, it means that the Naira is gaining its ground, and the Naira has been stable and is gradually moving to its fair value. It is a plus for us. But this arbitrage, this pressure for arbitrage has to be bridged as soon as possible, because before the gap gets wider than it is now.
Yeah, we don't need it wider. We don't want to go back to the days of round tripping and all of that in the FX market. But thank you so much, Dr. Foma Wokolo, Head of Research, Financial Derivatives Company. Thank you for coming on today.
Thank you, Ladi. This network is...
Yeah, it happens. Yeah, it happens. It happens. All right, now, so the governor of the Central Bank of Nigeria, Mr. Yemi Cardoso, has cautioned that the gains, that we've made so far in the FX market, and there's a threat to the macroeconomic stability as the elections approach this time. Speaking at the National Economic Council conference at the Presidential Villa, Dr. Cardoso cautioned that high liquidity in the financial system and aggressive election year spending could quickly reverse the central bank's progress. He added that past interventions worth 10.93 trillion Naira provided short-term relief but created lasting economic distortions and higher liquidity management costs. Take a listen.
Macroeconomic stability remains the most effective enabler in investment and increasing outputs across agri, manufacturing, and service value chains. Goes without saying that without stability, there will be no growth. So I believe if there's something positive that has come out of this is the fact that we now have stability. Danger ahead, the risk we must manage. And I thought this is a very important slide. Liquidity overhang. There's a lot of liquidity that still remains within the system, and we've got to manage this very, very carefully. So we are not out of the woods yet. The election cycle, typically election cycle, a lot of money gets pumped into the system. This has to be watched to ensure that it does not destabilize and challenge the very, very bold reforms which have brought about stability to the economy.
All right, yes, the governor there, telling us to take it easy, this season to make sure we don't reverse the gains made so far with the macroeconomy and with the FX management. Definitely, I guess all of us, we have to take precaution this time. All right, to our next conversation now. The Nigerian maritime sector has long been a critical but underutilized driver of our economy. Despite the country's growing imports and export volumes, much of the shipping value from freight to insurance leaves Nigeria because of foreign-dominated operations. Today we're going to analyze what to expect, how to reverse this trend. We have an expert, a leading voice in the industry joining us, Mr. Greg, who is a maritime and blue economy expert. He'll help us break down what's playing out right there in Nigeria's maritime sector. I don't know if we have him right now. Good morning, sir.
Good morning, Laddie. How are you?
Fantastic. It's great to have you, sir. Good morning. So, first off, when we hear, maritime, definitely a lot of us think of different, aspects of this sector. But help us understand, how shipping, how it works in Nigeria and the ownership model, because we hear a few Nigerians own ships in Nigeria's maritime sector, and most of it is owned by foreign companies. I don't know if you can hear me, sir.
Yeah, I can hear you now.
Yeah, so paint a picture for us. What's Nigeria's maritime and shipping industry? What is it like, really? We hear the ownership model for ships. We have more foreign owners of the ships we use for transport here.
Correct. Very briefly, our country is estimated to have about 230 million people or thereabouts. And you can imagine the volume of cargo imports. And thankfully, we have a lot of oil which we export. And it's a matter for regret that all the ships that carry our import cargo and our export cargo are owned by foreign ship owners. So all the freight associated with those shipments are leaving this country to other country ship owners. Now, the reason is not far-fetched. Our nation used to have the Nigerian National Shipping Line, which at some stage had about 29 or 30 ships, flagged Nigerian flag, registered in Nigeria, owned by Nigeria, and trading globally, flying the Nigerian flag. But regrettably, in 1995, for various reasons, our national shipping line was liquidated. And since that time, over 30 years, we have not been able to get back into our cargo is carried by foreign ships. You can imagine the dent that is doing to our national economy. There is a need, an urgent need for Nigeria to go back into global shipping for various reasons. If you remember during COVID, when different countries are now beginning to place limitations to where they can go to, we were literally almost stranded because we weren't having ships coming to Nigeria because of COVID. We didn't have our own ships. I think there is an urgent need for this country to go back to global shipping, and these of us in the maritime sector will not stop agitating for that. We think the private sector has a lot to do. The national shipping line failed because it was government that owned and ran it, and government has no business being in business. So the private sector should rise up to the occasion to see how we can go back to global shipping with Nigerian government support.
Right, and I'm guessing, from where I'm sitting, that owning a ship is no, it's not a joke, at all. Because looking at some of the costs here for a medium-sized commercial vessel, I hear it ranges between $2 million to about $30 million. For a large cargo ship, oil tankers, $50 million to about $150 plus million. Then there's also the operating costs side of things. You have the crew, fuel, bunkering, insurance, and all of that. So it seems it's a lot of money, to get one of these. And I'm wondering, okay, you spend all of this money, how long does it take to get your money back and, profit?
To answer your question, Ladi, I want to ask the foreign ship owners who are now feasting on our own opportunities with their ships. How did they get the ships or get the money? How are they able to survive continually if they are not making profit, if it's not viable? So whatever they are doing, we can do. Now, the ships you see in the background on my screen, that's one of my ships. I have about 11 of them working for they are tugboats working for the oil and gas sector. The last one cost us $18 million to build. It was financed by a bank, and they financed it because they saw that the business plan and the feasibility financial study was viable. So in other words, if we want to go back into global shipping, this country, we have a cargo. So the role of government is to give the Nigerians cargo guarantee. With the cargo guarantee, you can develop a business plan, a financial model that shows viability. Of course, it's not a quick turnaround business. The average payback period for some of the big ships is between 5 and 8 years. And then after that, the ship is operating profitably. And the lifespan of some of these ships is as long as 20 to 25, in some cases 30 years. So it's easy if government can arrange to guarantee cargo for Nigerians. Because right now, the situation we are in, the big international players have taken over all our cargo. They've secured it. And for us to get in there, government has to get involved. Government has to say, look, let Nigerian shipping companies, ship owners, at least participate up to 10%, 15% of our cargo. Most of the export, I give you an example, urea is exported from Nigeria to Brazil. Millions of tons of urea per annum. They are produced in Nigeria. Some of the companies producing them, the Nigerian government has a stake in those companies. And that's enough for them to say, listen, as an equity participant, we would like our own indigenes to get involved and participate in the trade for the benefit of the country. It will stem capital flight. It will create job opportunities for our maritime teaming youths who leave maritime institutions and they don't have any ships working. Some of them end up driving Okada and things like that. So we have to be intentional in going into it. If it's profitable for other nations, it can be profitable for Nigerians as well.
Yeah, it will be quite awkward moving from, ship to, Okada riding at this point. But in terms of foreign exchange, how much could Nigeria save or generate by, retaining more shipping and logistics revenue locally?
Ladi, on freight alone, this country is losing about $6 billion annually on freight alone. If you think of the quantum of imports we get daily into our country, let me give you an example. If you are to ship a 40-foot container from the United States to Nigeria, it's costing about $8,000 per container. Now, how many 40-foot containers are we handling in Lagos ports alone? Between 250 and 300 daily. So if you take an average of $6,000 per container, because if it's coming from Europe, it's cheaper than the US, and multiply that by 300 or even 200 conservatively, that's what we are losing out of this country daily. It's huge. So there is need to focus on the maritime sector. and look at how to get the country back into global trade. That's what we're talking about, particularly now that Nigeria, after 14 years, has successfully gotten back into the IMO, International Maritime Organization, Category C of the Security Council. Now, we are there for 2 years, and the world is watching to see what do we now make of this opportunity if we are not even seen, our flag is not seen anywhere in the seas. And there's a saying that he that controls the seas controls the world. So I can go on and on about the urgency for all of us to collectively focus on this sector and get ourselves back and take our right of place in global trading.
All right, and what quick wins do you think we can latch on, right now when it comes to policy or regulatory reforms that, we can start to see some kind of, green lights that, we're ready to, hit the seas? That's with Nigerian vessels?
That's a very good question, Ladi. I'm sure you are aware of the Nigerian Maritime Administration and Safety Agency, NIMASA. NIMASA is the regulatory body that is bestowed with responsibility of ensuring that Nigeria goes into shipping and then participate in global trade. And there is a section of the NIMASA Act that specifically says that government cargo, federal government, state government, local government cargo should be reserved for Nigerian shipping companies. Now that clause, I think, is sections 35, 36, 37 of the NIMASA Act, specifically makes that reservation. But in 2001, because it was abused, the government of the day, by verbal pronunciation, put a hold to that and put a stop to it. And that has been the problem. So the quick win now is for the present government to look at that act. Why was it abused at the time? What safety nets can we put to prevent that? And then lift that pronouncement so that the cargo can be available for well-profiled, serious-minded Nigerian shipping companies, work the regulations, closely monitored by the respective agencies, so we can do the right thing and get back to the business. If we don't have cargo, you cannot get a ship, because you need to know what cargo to carry to know what ship to buy. And then if you have the cargo, you can show profitability, and banks will give you the money to buy the ships. That's the low-hanging fruit to take away.
Fantastic. Thank you so much, sir. Definitely, we hope we, get more Nigerian ships out there in that global trade, because right now, trade is serious business globally. Thank you so much, Mr. Greg, who is a maritime and blue economy expert. Thank you for unpacking this with us.
Thank you for having me, Ladi. Have a great day.
You too, sir.
Bye-bye.
Thank you. All right, so after the break, we'll look at what's playing out with startups in Nigeria. We're seeing data out there showing a lot of pressure right now, raising funding within Nigeria. That's after the break. Just stay with us. See Nigerian startup ecosystem. We see, as it was seen once as Africa's brightest spot, but recently we've been having some issues, when it comes to fundraising. Recent data from the Big Deal showed that 2025, fundraising actually dropped a bit for some of the African countries. And according to CBN data, 2024 fintech equity funding, there is about $520 million. 2019 fintech equity funding was about $747 million, way more than the 2024 levels. Percentage of all African startup funding captured was about 37%, and growth in real-time transactions, $5 billion by 11 billion transactions. Fintech firms saying compliance costs is limiting innovation, about 87.5% of them. So The data from the CBN is showing that most of the startups are seeing a lot of squeeze, when it comes to doing business in the country and also, raising capital within the country. And most of the capital coming again from foreign partners at this point. So it's the same old story, just like the conversation we had about shipping in Nigeria, more foreign ships, doing business in Nigeria. So most of our startups are getting funding from abroad instead of getting funding from here. All right, let's discuss this and more now. Joining me for this conversation, we have Maury Doiwire, is a founder, lead partner at ENC Legal. Joining me right here in the studio. It's great to have you, sir. Good morning.
Thank you for having me.
Happy New Year.
Happy New Year.
Yeah.
Yes, I haven't been here.
Another year of raising funding.
Yes, pushing for
for some startups, chasing investors, trying to, milk as much as they can to get that business moving. But, the data we're seeing from the CBN here is showing that most of the funding is coming from abroad. And that comes with, risk, according to the central bank. Why would you say these startups, why aren't they getting the attention they need, when it comes to funding right here in Nigeria? The CBN has been trying to battle inflation, for the longest time, and we kept interest rates elevated. So the startups don't want to go to the banks to get money.
So I think that Nigerian deep pockets, right? Our local deep pockets, billionaires, investors, still don't get it, right? And so they don't believe that that's where their mouth is, so they're not putting their money there, right? Innovation is still very far-fetched to the average local billionaire, right? And that's because we're more pro systemic process as against innovating at the speed of light. So you speak to the average billionaire around an idea, and it sounds typically like a too good to be true proposition. So I think that there's the need for a lot more awareness in that space, a lot more conversations around it. And I think that part of that challenge, if you go back to 2022, NGX started the tech board.
Right.
3 years later or 4 years later, not a single startup has been listed on that board. And that's a challenge, right? And that's also because, so it's a two-way thing. It's also because the average Nigerian startup, right, is looking at raising funds in USD, right? Is looking at raising funds because the investors' appetite for returns is a lot lower than getting loans, like you have said. Because the investor has an intrinsic understanding of the fact that it's a long-term game. So they look more to people who understand that. And so they prefer to be listed in the New York Stock Exchange, on NASDAQ. Some of them are even going to be listed now on the London Stock Exchange, right? The NGX Startup Tech Board was supposed to address that gap, right, and provide a more structured framework for investments to come locally. But that hasn't seen the light of the day. And part of the challenge, I believe, were the stringent processes and regulations and the demands of it. And it made it less attractive to someone who did not even find it attractive in the first place, right? So that's the major thing.
So you're telling me now the deep pockets, the billionaires in Nigeria,
they don't get it, right? They don't get it, right?
They just say, oh, this is a startup. Yeah. They're claiming they're going to solve this problem. They need my money, but it's too risky.
Yes.
I don't. What if the business
fails? Right? And already, you see, in this part of the world, financing comes from a strong point of securitization. Right, you've got to have a security, you've got to have a system in place to protect and securitize the investors' funds. For startups, they really don't have anything other than the idea, right? And
do you think the startup founders, do you think they inspire confidence enough to get the billionaires?
That's why today I encourage founders to bootstrap as much as they can and get to the market and push. And so your market sustainability index serves as your first level security, right? So the billionaire you're asking for $1 million, $2 million already sees that you've bootstrapped long enough to get to the market, to acquire 10,000 customers, to be able to push this from point A to point B. And so they know that their investment is more from a scale point of view, to help you scale or balance, your runway, right, as against funding from the onset. And I think that that's one of the first key things that I tell founders, right? When you come to me and say, look, this is what we're trying to do and we're trying to raise, and I say, look, bootstrap as much as you can. But you see, there are still a lot of sectors that have a challenge with bootstrapping, right? Some ideas are very expensive to even kickstart, and so they require funding. And if you look at Google today, if they didn't get that initial check of $100,000, would we have Google today? Right. So those are some of the conversations that we need to have, and conversations like this help push the narrative out that you can't securitize too much when you're dealing with startups and when you're dealing with innovation-driven entities, because these are ideas that are helping push the button in the intelligence age, for instance, and some of them don't have the resources to take it beyond that ideation point of view. So we need to start looking at other ways of providing security. And I think that was one of the reasons why we pushed for the enactment of the Nigeria Startup Act. The essence of that act...
How's that looking?
Well, we're hoping that, in this year, a lot more will be done, right? Because one key element in the act was to label startups, right? And so when you give a startup a labeled status, it gives them a higher level of trust when it comes to raising funds. And government was supposed to put their money where their mouth is, right? Even though 10 billion is enshrined in the act, and that's not much, really, when you talk about pushing for a lot of innovation. But that was supposed to be a fund accessible by startups to get running, right? So when you label a startup already, that labeling serves as a first-level security, right? And government is saying to you, I'm guaranteeing you, so to speak, for people to believe in you and fund your business, right? So the issue with funding, local funding, is one that has to be taken from all sides of the line. Right. Government, private sector, and even the founders themselves.
All right, so, definitely funding is one thing. Mm-hmm. But now, the data from the CBN is showing that some of these startups, they're having a lot of cost pressures. Mm-hmm. And, definitely, a startup is, very like a baby, mm-hmm. At this point. And, put them in a harsh business environment, coupled with, still struggling to raise funding. Most of them, according to the survey from CBN, they struggle with energy, logistics, FX, even though 2025, mm-hmm. Naira was stable, mm-hmm. Most of 2025 and, into 2026. So, at this point, aside funding, can they survive in this environment?
I think that the first thing is fragmented regulation. The first major challenge many startups have, especially the fintech, which is often the most popular of all the startups, right, is many founders really don't know what regulation binds them. And I'll even tell you for a fact, even those that are regulated by, CBN, sometimes don't understand the limits, right, of that regulation. Don't even understand the clear obligations that are expected of them, right? And while, you could give kudos to the CBN for what they've done thus far, but the same report will tell you that there is this very sharp divide of founders who believe that regulation is good enough, and some believe that regulation is stifling them, right? So you have a very sharp divide where people believe that, okay, yes, this regulation is enabling. Another 50% believes that this regulation is restrictive. Now, the cost of regulation is a challenge. The timelines is a problem. And then most importantly, the fragmented approach to this, right? And that's the beginning. So when you make regulation look hydra-headed, it becomes a problem for an innovative young business to approach.
Okay. All right. But we're running out of time at this point. But, very quickly now, I'm a startup at this point. I want to raise funding, but at the same time, I want to operate in this harsh environment. What do I do?
Well, do what you have to do. Put your head in the game. get what you need to get. So one thing I say to fintechs, I say, look, you don't need to go for the regulation in the beginning. Build your corporate structure, piggyback a collaborative arrangement with an entity that has regulation, right? Get to market within the limits of that collaboration. And that's one fine thing CBN has done, is to allow for collaborative frameworks between growing nascent innovative financial technology enterprises and established entities that have all the licenses and growth, and say, okay, so apply certain technology, put your API in theirs, and push to a reasonable extent, right? Share some fees, and then when you get to the stage where you believe you're big enough and you want to scale and you can afford that regulation, then you go for the regulation, right? But if you really want to look at that report, and one thing I wanted to point out is the depth of academic research in the entire report. And that's a major problem, right? Because it is only the academic institutions that give institutional information backed by empirical data that are long-lasting over the years, right? So when you go to the UK, you look at Oxford, Cambridge, a lot of work is going into what the financial technology sector is doing in the United Kingdom. We don't have that in this report, right? And so it's important to bring in the ivory tower, right? It's important that we have a synergy where deep level research is funded and done to look into the work, right? We've done very well. Digital financial technology system has done excellently well, and really we should pat ourselves at the back. We've beat the US, we've beat G20, right? We've done 11 billion transactions, instant transactions in 1 year. There are very few countries in the world where this is done, right? Our systems are working and are great, but we need to do a lot more research, right? And supervisory technology, which really will boost even the regulator, right? And I like the fact that CBN is looking at subtech to say, look, let's now regulate in real time instead of watching CCTV and looking at what is happening after the event. Right. Use technology to detect as it's happening, to prevent, right? More from a proactive standpoint. All right. But you can't achieve that if you don't work with the startups. And if you don't enable them, they won't give you their best. So we've got to work out a win-win approach and bring back the sandboxes again and give it more zest. Bring more of them into the picture. Go across all the cities of this country. Pull these guys in. Work with the academic institutions and get the best hands, right? I have a nephew who is studying engineering, and the ideas that come off him are excellent. And I wonder if he got the right support, how much he'll be able to enable
so much to unpack there, definitely, and so many ideas at this point. We hope the right people get the funding. Thank you so much. Uyi is a founder, lead partner, E&C Legal. Thank you for coming on today.
Thank you for having me.
Fantastic. All right, after this, we go global. All right, we head straight to the global economy now. Will Libong has the details.
Hi, Lani. Well, let's just jump right in. We see UK Prime Minister Keir Starmer shored up his position after a turbulent day in Westminster that raised questions about his future in office. Now, Starmer secured public backing from his entire cabinet, including senior figures seen as potential rivals, easing immediate pressure within the governing Labour Party. Now, party sources say the support has stabilized his leadership for now, but warn the reprieve may be temporary as political tensions continue and as the Epstein case continues to unwind. Now, BP has suspended its share buyback program after reporting fourth-quarter profit in line with expectations, citing pressure from lower oil prices and the need to strengthen its balance sheet. And the energy giant posted a fourth-quarter profit of $1.54 billion, matching forecast, while full-year profit fell to $7.49 billion, down from nearly $9 billion in 2024 and slightly below expectations. Now, BP says excess cash will now be used to shore up finances as the European oil and gas sector continues to face a challenging operating environment. Now we'll move to earnings. Barclays says it will return at least $15 billion to shareholders by 2028 after beating profit expectations as it pushes ahead with plans to cut costs and boost profitability. The bank posted a return of tangible equity of 11.3% in 2025 and is targeting more than 14% by 2028 under its long-term strategy. Barclays says it will deliver around £2 billion in further efficiency savings, building on £700 million already achieved last year. Now move to the health space. AstraZeneca says it expects profits to grow further this year, driven by strong demand for its cancer medicines, and it offsets the patent expiry of a key diabetes drugs. The UK drug maker forecasts a low double-digit rise in earnings per share, including some items broadly in line with market expectations. Now, AstraZeneca also reported fourth-quarter profits and revenue that came in roughly in line with analyst forecasts. Now, sales at Gucci fell again in the final months of last year as owner Kering continues efforts to revive its biggest brand under new leadership. Now, comparable revenue at Gucci dropped 10% in the fourth quarter, marking the brand's 10th straight quarter of decline, though slightly better than market expectations. And the ongoing slump highlights the challenge facing Kering as it works to restore growth at the luxury label. Up next, Japan's Nikkei 225 closed at a record high on Tuesday, extending its post-election rally as most Asian stock markets traded higher. And the index rose 2.28% to finish at 57,650.54 points, while the broader Topics index also climbed to 1.9% to a new record, boosted by optimism following Prime Minister Sene Takahachi's election victory. Now, SoftBank shares jumped more than 10% after its subsidiary upgraded its full-year outlook, adding to strong gains from the previous session. Now, yields on Japan's long bonds also saw a rally on the swing. Still staying with Asia, we see South Korea's largest defense firm, Hanwha Aerospace, dropped over 6% after Q4 revenue and pre-tax profit missed estimates. Revenue rose 72.6% to 8.33 trillion won, while pre-tax profit fell 72% to 602 billion won. Now, full-year revenue reached 26.61 trillion won, with pre-tax profit down 90% to 2.15 trillion won. Operating profits rose 75% and net profits beat expectations at 2.14 trillion won. Now, shares have climbed 19% year to date after a 193% rally in 2025. Demand remains strong for Hanwha's defense systems, including the K9 Thunder and Chimo rocket systems. And that's Global News Brief for you. It's back to Ladi now.
Thank you, Will. Well, the local bourse is trading right now, and we see it's 174,000 points. Assets getting attention right there. That's talking about the stocks, Deep Capital Management, Tantalizers, Omatech Ventures, Dangote Sugar, and Champs. Do go out there, make some money. I'm Ladi Williams. Bye for now.